Hello traders, in this video I'm going to show you how to stick to your trading plan even when everything that's happening is breaking your statistical data, and I'll show you why it's so important to do that. So what you're looking at here is a recording from my laptop. I was having issues with my desktop this morning, so the video is going to look a little bit different than usual. Eventually we did switch back to the desktop, and you'll see when that happens in just a moment. But we were watching VERU. That was the #1 stock on our small cap screener, and we picked it according to the trading plan, what the trading plan tells us to do, and the criteria that needs to be met for us to pick that stock. And now we are marking out our levels that we want to see hit in order for us to be triggered to take a trade. And this white level is really key, because if it gets hit, and I'm not sure if it's going to end up here at the moment, and I'm checking my active trade settings that they are what I want them to be, because this is the laptop again. But let's go just fast forward here. So the key level, that white line, horizontal line, does settle at 1641. So now I'm waiting for that first entry to get triggered. And if you were following during my test trading, you know that the first entry did not work out often enough to be profitable. And that's really kind of the key to this video here, is we do get triggered on the first entry. And of course, I don't take the entry because everything we learned during our test trading tells us not to do that. But we also learn that almost 25% of the time, I think it's about 23% of the time, this entry does work out. So that means there are going to be situations where this entry works out and we're not going to be in it, and we just have to let the stock do its thing and stop trading for the day if that happens. And that's pretty much what happens here. I'm going to show you. So this was where we got triggered for the first entry for the break of this 1 minute candle. And our ideal entry would be 1598, and the stop loss would be 1575. So eventually you'll see me calculate the 3R profit target, and we find out that the price level does get hit. So let's fast forward, and we'll just switch to the desktop video here at the end and see what ends up happening to this ticker symbol. So let's see here. This should be, yes, nope, wrong video. That's an older video. And here we go. This is the rest of today's video. So now this is the same ticker symbol. You're just looking at it on my desktop. It's not as kind of blown up. But this is exactly the same price action that we were just looking at. You can see all the same levels marked out here. There's my entry, 1598. I didn't take that entry because the trading plan says not to, because statistically that only works out about 23% of the time, but today was one of those days where it worked out. So the thing is we cannot trade against our statistics, even though sometimes they work out. What we want to do is take the entries that work out over time. So if we took this entry and we keep taking this entry, eventually we are going to be unprofitable, even though this particular case it worked out and it hit the 3R profit target. So here you could see me calculating the 3R profit target, and it's 1667. So I'm moving that green line up to 1667. And basically what happens is if the price hits that level, then that means there was a statistical anomaly today, and the stock met that 3R profit target, which it only will do that about 23% of the time. And that is all shown on our trading statistics. I'll show you those at the end, but let's just fast forward and we'll see what happens here. It looked like it might come down for a little bit, but nope, it goes up and hits that 3R profit target. There we go. So that means that we have to stop trading for the day. We never took a trade, but we were waiting for it to hit this red line, and then we would have been triggered into a trade. And this is the reason why we don't take that trade, is because we know about 23% of the time it works out, and that means that 77% of the time it fails. And with a 3R profit target, the break-even win rate is 25%. So that's not a profitable trade, and that's what we learned with our test trading. Here is the 3R profit target for the first entry. It is down -6R after 100 trades total, 61 of those being the first entry. So it doesn't make sense to take that trade, even though occasionally, yes, it's going to work out as it did today. But we know that over time, if we continue to take that entry, we are not going to be profitable. So that's why today we just sat by the sidelines and watched that trade play out, and that was it. So here it is right now. Here finally hit that level, but it already hit our 3-hour profit target, so we can't take a trade anymore at this point. So hopefully this video was helpful to you. Again, there was no trade taken, but the key message here was to stick to your trading plan, stick to your statistics, because over time they're going to work out. Occasionally you're going to have these anomalies where you're going to think, man, if I would have just entered that trade, I would have had a nice 3-hour trade today. Yeah, today, but over time you would be unprofitable because of this trade based on the data that we collected. I encourage you to collect your own data to take 100 test trades with your trading plan and figure out what the results are for you and base your trading off of those statistics. So hopefully this video was helpful to you. If it was, hit the like button. If you haven't subscribed, please do so. And as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.